Hello and welcome to Pro Trader Strategies Market Commentary for Friday, December the 9th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today, except for in the United States. Here we got University of Michigan Consumer Confidence, and it came in at 98, was expected to be 94.3. So the Trump rally, or the Trump election, this Trump rally, everything going behind it is really allowing the consumer to be confident. So that is boding well for the holiday season for a lot of these retailers and things of that nature. If the consumer feels confident in the economy, that will probably trickle into the overall sales for these people. So that's why that's important, especially at this point in time heading into the holiday season. We also got wholesale inventories came in line with expectations at negative 0.4%, was expected to be negative 0.4%. So the overall markets are actually, the equity markets in general are heading higher. Here we have the crude oil numbers, /CL up 50 cents on the day and testing the value area high as we speak. So that's going to be a line in the sand for the bulls to get over as well. We got gold coming off. Anytime the equities are pushing higher, the economy is starting to look good, people are going to be pulling their money out of that safe haven of gold and putting it into stocks, which is what we've been seeing as a rotation for the last month or so. And it's continuing today with gold down over $8 on the day. Then we have the bonds. They were down just a point on the day, which is down 31 ticks. It's probably 31 bitted even, as we used to arb on the floor, and right there at the 149 handle. So I still continue to see this moving sideways as we head into the Fed meeting. I think the hike is probably pretty much priced in already. There we go. As we went out, it went even trade. Then we have the Dow Jones Industrial Average up over 47 points on the day. Looking at it, we have a new historical high today at 19,671. I think S&P's printed a new historical high as well, but it doesn't look like the E-mini futures have ticked that off yet. NASDAQ pushing higher as well, 27 points on the day, right against that value area high. You can see it has acted as resistance several times before. We did bust up and trade into the 49 handle there. We haven't traded up there yet today. Very close to it. Came shy of it by 3 or 4 ticks right there. So we'll have to see if it can manage to scrape out those new historical highs. We got the historical high yesterday in the E-mini S&Ps, which isn't the SPOOs necessarily, but this is the E-mini S&Ps traded at the Chicago Board of Trade, up almost 5 points on the day, but looking at trying to make a new historical high. It seems like we're going to be saying this quite often. When we're that close to the historical highs, it's going to continue to kind of push up. So the overall Trump rally really in effect right now. This is the 15-minute breakdown of the E-mini S&Ps and 15-minute candlesticks here. And we had an inside day, but this last bit of a push has pushed that value area high just a little bit higher. But overnight, for the most part, it was pretty quiet and just trading sideways. Once we got those numbers out of the University of Michigan, we saw the market get a little bit of a boost to the upside, gave it a little bit of octane to push a little higher. Now, these are a couple of trades that I've done, and This was something that I actually learned at the Festival of Traders. So it was a trading recommendation, that not necessarily a recommendation, but a trading scenario where this gentleman was talking about when you have really low implied volatility and the market is trading, or the underlying is trading at a 52-week high, and you have a 52-week low in the IV percent, that is a time to get long something, because it's going to have a tendency to want to pop even higher. So I decided to play around with it and put on a couple of small trades just to see how it works out. I also needed to get long deltas, so it seemed like the perfect opportunity to do that. And I went into RIG, which is Transocean, but ticker symbol RIG. And I went into the January and bought the 13 calls and sold the 17 calls to finance that extrinsic value. He didn't give he didn't give a recommendation on a particular option strategy or anything. So I just decided to use one of my option strategies, follow my rules, and throw something on there. So I did it pretty small, like I said, and I ended up doing that, paying $1.95 for that trade there for the January 13-17 call spread that I got long. So fits right in line with all my rules. So I decided to go ahead and do that. Another thing was with Deere. Deere was pretty close to it. It's recently gotten to those 52-week highs. I also like Deere, so I decided to go long on this, get a little bit long deltas. I'm going to be pretty mindful of it with this tweezer top, but I thought if we can get and break above that tweezer top, that might be where we really start to see that pop happen. They also came out with better than expected earnings as well, so this looked like a pretty good opportunity to do something in Deere. So I went into the March, went a bit further in duration with this one, and went into the March, bought the 95 calls and sold the 110 calls to finance that extrinsic value again that I talk about in those market commentary, in those webinars on long call spreads, and paid $7.74 for it. So that put my break even below where the current market was trading. Looked pretty nice, so I went ahead and put that one on as well. A couple of things that I actually did yesterday was in WYNN. Yesterday, WYNN took a huge tumble. It was a little bit overdone to the downside, I thought. It was basically because Macau, a lot of the casino stocks that are in Macau, which is in China, took a tumble yesterday because China came out and said that they were going to half the amount of ATM withdrawals that particular people could take out, from like $1,200 or almost $1,300 down to just below, right around $600. So they have those ATM withdrawals, which made traders think that WYNN was going to really be hurt by that. Doesn't seem like that's going to be the case. I don't believe, because I feel like when people go to the casino, a lot of times they are bringing that money with them. It's not that they're doing an ATM withdrawal necessarily at the casino, but in that regard, they took a tumble because Macau said that they were going to not allow ATM withdrawals as big as they were in the past. So yesterday, towards the end of the day, I decided to cover my WYNN trade, and in WYNN I just put on a couple of puts in there, and I haven't had them on for very long, to be quite honest. And I had on the January 95 puts. I originally paid $3.15 for it, and I sold them out yesterday for $7.35. So you can probably get pretty close to that today, although I think I was trading around, or WYNN was trading around $91 yesterday when I was able to cover that one. So look for that to be able to take advantage of it. Excuse me. And then in Lululemon, you guys know that this Lululemon trade has not been working out for me. I had on a strangle in there for the earnings event. Today it is going off the board. I have on those December weeklies that expire today on the 9th, and I had originally on the 51.65 strangle. So those 65 calls are in the money, clearly. and it's not working out very well there. But what I decided to do, I'm going to probably end up taking these and have those calls put to me. I'm going to be short the underlying, so I'll be short Lululemon at $65. Well, what do? We stay mechanical with that, and I decided to go into the January and sell the January 65 puts. So collect a little bit of premium on that, lower my basis, and I sold those for $1.65. So what I'm looking to do is lower my basis on that. That increases my break even right now, since I originally collected about 88 cents for that first strangle, collected that $1.65 right there. That increases my break even closer to about $67. So if I can get a bit of a pullback down, I'm going to look to try and cover those after I get that stock probably handed to me today, unless something crazy happens and we trade down below 65, which I really don't see happening. So that's why I decided to go ahead and put on those puts. So staying mechanical, trying to stay with my rules on all this stuff. Today we're going to be doing a webinar on the put diagonal, which is a really good one, like right after earnings, something for like Lulu or any of these stocks that have already had their earnings. We're going to see really low implied volatility. I'm going to show you how to take advantage of some of that going forward, and we'll put some trades on probably Monday in accordance to this webinar. So go to protraderstrategies.com, sign up for that. I think you'll learn a lot from it, and it's a great way to set up for the next earnings cycle. All right, if you can't take that, take it easy.